Hello guys, and welcome to another midweek analysis video brought to you by Learnity. Starting with this midweek analysis, we're going to be looking at AUD/USD because this has a clear drawn liquidity that could be easily met during this week. So the first thing we need to understand is that from the higher time frame, we have seen price be in a consolidation state for quite some time, for a very large amount of time, and then we actually saw price try to trade above but did not close above this old high with momentum. Now the amazing thing here is that price has retraced back into 50% of this previous area of consolidation, but it was still unable to expand away from that range, and it utilized this order block over here and also this fair value gap as its resistance to push lower. So if you look at this very well, we can see that this other block over here acted as what, a resistance, and you can see how price respected that area and has been pushing down. So to me, the clear drawn liquidity on AUD/USD is this low over here, and if you drop down into the 4-hour time frame, we can start looking for our structural highs and lows and our key levels and our key POIs to trade from. Right, so one thing we can see on the 4-hour is that this over here is a 4-hour mitigation block, of which price has respected. You can see that was the last up close candle before price started going down. But to get more clear view, you can also go into the 1-hour time frame, and you see how all of these blocks over here are acting as that one 4-hour mitigation block we were seeing. And you can see price has hit into that area twice and is going down. So right here we can see on the 1-hour time frame that we have an inverse fair value gap here, which has been filled, and price has retraded into that inverse fair value gap and has tried to close below it. So this current 1-hour candle is currently trading and price has not yet closed below it. So the logic is this: if the current trading price should close at this level, or should close lower than this, or should close anywhere below this 1-hour bullish candle, then this would be our 1-hour order block. All right, and then we can take a trade going lower into this level here, looking for 69 big figure, 0.69 big figure. All right, that is our drawn liquidity. If price should close below this area on the 1-hour time frame, we could easily just wait for a retracement into that area, or we could still go further into the 15 minutes and wait for a refined entry. But what we want to see is for price to actually close below this area, all right, below this 1-hour order block. All right, and then we can start hunting for sales into this area. And if we go into USD/JPY, we can see on USD/JPY that price is not breaking above this old high here. If we go into the 4-hour, we can see it's more visible that this high has been taken out. Price ran down with enough momentum, leaving fair value gaps, traded back up into discount, and or rather into premium, and you can see that displacement again one more time lower. So what I'm expecting is to see price react from this area, this short-term high, and also mitigation block. All right, price has retraced into that area twice. If we go into the 1-hour, you can see that that is the previous area of what support broken, acting as resistance. So I'm looking to see if price actually trades below this area over here. So should be seeing and expecting a move like this to this low, and then subsequently we can actually trade lower to as low as 157.5. All right, that'll be the ultimate target. But unless we break below this area, or unless we break below 158.7, we are not going to be taking any position. So this will wrap it up for this week market analysis. If you're going to be trading alongside this narrative, do remember to always use appropriate risk management sizes and make sure you do not over leverage. Thank you for watching, and until I come away again next time, remember to always trade well and trade safe.